Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's Tuesday, the 29th of November, and we have Charu Chanana, a market strategist from Saxo Markets Singapore, coming to us. Charu, good afternoon.
Good afternoon, Brian. Great to be back with you.
Now, lovely to have you, Charu. I'm going to come back to you and get more insights from you after we take a look at the numbers across the region. We're going to start with crypto markets. Bitcoin is at 16,471. It's up marginally 1.62%. Ethereum is at 1,200. It's up 2.23%. Now, looking across the regional equity markets, we start close to home to you with the SGX. It is up 0.92%. Bursa Malaysia, where I'm at, is down 0.93%. Shanghai is up 2.27%. The ASX All Ordinaries is up 0.27%. The Nikkei is down 0.51%. The Hang Seng, however, is up a whopping 4.41%. And rounding up the numbers, we've got the Kospi, which is up 0.85%. Very mixed bag across the region. Charu, tell us why.
But more so broadly, I think it's risk on today, after there's been some sense of relief from China, protests not really getting worse, both from the public side, but also, from the government retaliation side, which was also a fear. So we haven't seen things getting worse there. And of course, that's, I think, a sigh of relief after the losses that we saw yesterday.
Now, is there any potential impact that Saxo sees in terms of that reopening schedule as a result of these protests right now?
Of course, like yesterday I was talking to a lot of clients, and the constant question that we got was that do these protests signal that we will see a delay in China's reopening, or rather it is really the beginning of the end of zero COVID, where I kind of lean towards the latter, where I think that with that kind of public pressure building in now, I think that gives more ammunition to the government to really go ahead with its reopening measures, because it is obviously very likely that we're going to see a high number of cases, potentially high number of deaths as well, which is very unfortunate. But had they done it totally out of economic reasons, and then we would have seen those numbers, and then public would have protested for the rise in cases, that would have been a difficult situation to manage, and the government would have to take a step back. But right now, the public wants to reopen, so there will potentially be more acceptance of those high number of cases, and the government has obviously conveyed its intention as well. So I see, somewhere in 2023, this can really translate into a broader reopening.
Now, Charu, on a different note now, the Fed is dominating investor conversations right now. The more hawkish Fed noises coming out of various speakers. What's your take on this right now?
Yes, ever since we got that soft CPI release for October, I actually thought there hasn't been enough pushback from the Fed members on those easing expectations. But last night, we did have Bullard speaking, who is the most hawkish member on the Fed board. And he kind of clearly said that the market is underpricing the path of Fed moves from here. The other members as well. So there was a hawkish chorus last night. But what remains really interesting is that the markets are becoming a lot more immune to those kind of comments, and the interest rate story is really being priced into the markets. I mean, the kind of moves we saw yesterday from China's protests, that's nowhere close to what we're seeing today as a reaction to that hawkish Bullard speech. So I think the focus of the markets has really shifted away from the Fed hiking cycle. It will be on China. It will be on economic slowdown potentially going into next year. It will be on liquidity concerns. But most of the interest rate story is already there in the markets now.
Then how is that going to impact then the dollar as well as Asian currencies?
So for the dollar, I mean, it does appear, with that kind of movement, with most of the interest rate story being in the markets, there could be a potentially a a temporary peak in the US dollar this quarter. But what is interesting is that dollar is not just yield sensitive; it is also a very risk sensitive currency. And a lot of focus now is shifting away from yields to the risk. And as we get into the slower economic data and probably a recession, I don't know yet. But then when you have those concerns, again, you have safe haven flows to the dollar. And if you do have liquidity concerns, I mean, we're still seeing fallouts from that FTX collapse, right? And if that spreads into the equity markets or the broader financial markets, again, the liquidity that you find really is in US treasuries, is in US dollars. So there will be, again, flows back into the US dollar. So I don't think we've seen the cycle highs yet. But yeah, there is potentially a temporary peak until we see those concerns ramp up further. But that's certainly a sigh of relief for Asian currencies with that temporary peak in the dollar. I think Asian currencies have anyway done really well, much better than you would anticipate them to do in a Fed hiking cycle. So I really don't see any broad-based concerns here for Asian currencies from even if that strength in the US dollar returns.
Charu, I want to only bring to attention one exception to that is the yen, which has been impacted severely compared to other Asian currencies, as you pointed out. What's your view on the yen now? Is there relief from the yen because of the policy divergence?
I think yes. I mean, yen is obviously was suffering because of the yield differentials between the US and Japan, which is keeping its yields capped still. But with that differential getting lower now, as the US yields stop rising further, even if they go back to 4%, even 4.5%, I think that, again, like I said, that interest rate story has mostly been absorbed by the markets. So the yen, obviously, with the kind of losses it has seen this year, there's obviously a potential for a big reversal. But at the same time, again, there are two other factors that are supporting the yen, and that is it is also a safe haven currency. It hasn't really depicted its safe haven characteristics this year. But with these China concerns coming back, I do see it behaving like a risk currency again. So again, you could see flows going back into the yen. And the other thing is, I mean, I'm seeing this subtle shift in BOJ's tone, where the expectations of a pivot or a tweak in their yield curve control policy is something that we still can't discount. By the time Kuroda retires in April 2023, just before that, or with the new governor when we have one, I think that expectation is still there, and that again is also supporting the yen at the moment.
Now, Charu, as always, thank you very much for your insights. Thanks for having you on the show.
Thank you, Brian. Thank you.
Now, we've been speaking to Charu Chanana, market strategist from Saxo Markets Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.